In our Trader Rundown today, Dan Deming of KKM Financial is here to talk all about the market. Hello to you.
Hello, Angie.
October is traditionally known as the scary month for the market. So do you see anything that's brewing out there?
Well, we got a little flare-up in volatility last week, that's for sure, Angie, with the news coming out of Europe about Deutsche Bank and the fact that you had a kind of an old-fashioned bank run there on Thursday where the market really was under some duress. However, we'll have to see how that plays out this week in the market. It looks like the market's kind of digested that news, and it looks like maybe that fine might not be as big as what the market was expecting. So, it could be washed out of the market pretty quickly, but obviously, heading into October, psychology is a big part of the market and on a pricing level, and when you see that type of shift in psychology, it always kind of has a tendency to feed on itself during times when the market hasn't performed particularly well.
Also this week we have the jobs number for September coming out. Okay, so tough to know because we've had some surprisingly great job numbers come out.
We have, the trend's been pretty positive, but again, we'll have to see. The Fed's going to weigh this one pretty heavily as they start to think about their decision in December. It's going to be interesting to see. If we get a blowout number, then that will probably put the onus back into the camp of the raise in December. It did feel interesting last week. I know there was two sides of the story, but the market seemed to be discounting a little bit the fact that the Fed might actually move in December. I know we didn't see a big shift in what the expectations were when you see some of the metrics out there, but it just felt like the market was really starting to price out maybe the chance of a December move as you saw the activity in the bond market kind of shift as well. So this could be a big week for that as far as setting the table for December.
We are watching those bonds and those rates are still low.
They are very low. I mean, they came back in, because I think while we saw that dislocation, whenever you see something about the banking sector like we saw last week, even though it might be short-lived, you see money flow out of the market very quickly and into bonds. So that was part of the reason, I think. Also, the economic numbers, even though they were decent last week, we saw a downward revision to the potential GDP for the fourth quarter. So, you're still getting a mixed bag of numbers, and the market's, again, trying to digest that. And in that holding pattern right here, when you look at the SPX between 2150 and 2170.
Do you see any glaring trades right now?
Nothing.
Buys, sells, anything?
You've seen certain sectors where you've seen a big pickup in activity. You look at the semiconductor sector last week.
The chips.
Big move there. When you saw that Qualcomm and NXP announcement come out, that sector was very strong. Also, oil, energy, very strong last week with a shift in the expectations here. We'll have to see how that filters through the market this week as well. But those are two sectors. When you look at the semiconductor sector, the oil sector, certainly they were shining stars last week.
Thanks as always.
Thanks for having me, Angie.